Guys, avoid open trading communities, most especially trading view. I'm emphasizing on trading view. This shit did me dirty, guys, when I started trading. I'm not talking about the main platform to analyze market, okay? But once you go inside trading view, you know there's a community there that's designated for traders. You will mostly find beginners traders under this community. Most people that know what they are doing in the financial markets are not in those communities. They've already left those communities. We all came into this community when we started, but once you get to a stage in your 4 years journey, you actually try to narrow things down to so you can focus on what is actually working in the financial market. What this does is whenever you analyze the market and probably you have a bullish scenario on the market, right? That this market is going to buy and you've gotten your confirmation and all that, you move to your trading view. That's your open trading community. It can be any other community you belong to. You go to your trading community and you check for what your fellow traders are dropping there. Now once you see other traders dropping sell scenario and you see this trader dropping buy scenario, now what happens? You actually lose focus. You're second guessing your strategy. You might end up taking the signal that's the one you got because now you're not confident in what you already analyzed in the financial market, and the markets end up resulting in a loss. Now you're angry at yourself, or probably you took your analysis, you took the buy position. Now, whenever you have a pullback in the market, right now you're scared because you already saw another analysis that showed that this market might be a bearish market. Now you panicked out of the trade, and the moment you close the trade went in your actual direction. So just stick to a community where traders post. Probably there's a admin in that group that posts, and other people don't have the chance to actually share their opinion always. They can open it once in a week or twice in a week, probably in a weekend or that, but it's not always open. So you can actually narrow things down and focus on your particular market. You are comfortable for every action you take in the financial market. So the second thing I wish I knew when I started trading the financial market is bothering about the perfect strategy. Oh my god, guys. I remember literally when I started trading the financial markets, I went on YouTube. Yeah, I came on YouTube here. I went to other platforms. I went on Google. And here was my keyword. What is the best strategy? What is the no nonsense strategy? Strategy without loss. Move from $1 to $10,000. You know all those kind of strategy. Those are the things I was actually typing. I was just looking for the holy grail. And you see, when it comes to this kind of content, you will definitely find a lot of them on the internet, a lot of them, because beginners are focused on strategy. All you want is strategy. Just give me that strategy that won't have any loss. When I click the buy button, by the end of the day I'm making money. So what do you expect? Content creators went ahead and started giving this kind of content because we're actually looking for views, so we'll go ahead and create this kind of content. By the way, I don't have such content on my channel at the moment, right? I don't have such content, but these are my honest review, guys. If I had known, I would have focused on a better thing. I remember when I started Forex, right? I went to meet my girlfriend then. That was my ex. And I told her, babe, no, I didn't say it. I wanted to. I almost said it, and I'm glad I never did. I wanted to say, babe, the next time you meet me, I'll be a millionaire. Oh my God. It took me extra over 1.5 years before I even knew what I was actually doing in the financial market. You see, when you start trading, you might have beginner's luck and you're making profit out of the market on your demo account. And you feel trading is easy. So, and based on the strategy I was saying, I just felt, whoa, everywhere is, you understand, everywhere is, you understand. So, number three, trading on a smartphone. Well, this is not bad when you're starting, guys. When you want to start Forex, there's no better time to start trading the financial market. Whatever you're using at the moment, just keep using it, okay? But once you have, probably maybe you get money to buy a better gadget, guys, opt for something bigger. Okay, if you're using your smartphone at the moment, just try and get a bigger screen, right? Get probably a laptop or something like that. What this does is At the moment, your strategy, whatever you're doing in the market, might be working, and you've already confirmed it that okay, this stuff is working, but you're still making some losses. Once you get a bigger screen and you start analyzing on a bigger screen, you see a lot of things, because now when you're using your smartphone, you're seeing from a smaller perspective. But once you use a bigger screen, you're seeing everything that is going on in the market. So that helps you to know the overall direction of the market. So at the end of the day, just try and get a bigger screen. That doesn't mean you can't make money on your smaller screen, right? The advantage of smaller screen, guys, once you analyze your market on a bigger screen and you have your overall direction, now probably when you go out for anything you're doing, you have your daily activities that you're doing, right? So once you go out, you can manage your trade on your smaller screen. But when it comes to the analyzing the market, try and use a bigger screen. Number three, treat support and resistance as a zone. Oh my god, I wasted a lot of time in this particular point, guys. Treat support and resistance as a zone. Don't treat it as a line. Whenever market goes up and probably gets to your resistance line, guys, once it gets to your resistance, right, as a beginner trader, sometimes you just click sell button because I got into a resistance, you automatically think this market should just fall down. No, treat it as a zone, guys. Treat it as a zone. It doesn't mean it will definitely fall. The market doesn't respect that's your line. There's a lot of things happening when market gets to the resistance or the support. They are called the supply and the demand. That's why you get a lot of fake outs and you get a lot of stop out from the financial market. So just treat those places as a zone rather than a line. So number five, well, I don't know how many I'm going to cover in this particular video, because the more I say this, a lot of tips keep coming on my mind, and I actually can't deliver everything in this single video because it will be too long for one video. So I think probably I'll get a part two, or would make this a series, or I don't know yet. So always use a stop loss. Try to use a stop loss. Normally it's crazy how market just go and stop you out and start going your direction. It's a terrible feeling. We all feel bad. We've all been through that. Okay, your stop loss is the only power you have on the market. You can always reduce what you are willing to risk in the financial market. I understand why most people don't use stop loss. So personally, why I wasn't using stop loss when I started trading forex is because market will just get to my stop loss and stop me out, and the markets continue to move in my direction. The mistake I was making then was there's something called psychological zone in the financial market. As human, whenever you go to the market to buy something and they call it 6,280, as human you might just try to bargain, and you bargain to something like 6,000, or you bargain to 6,200. You try to remove the 80 out of this, right? So that's what is called psychological zone. So as beginner trader, you tend to what? Put your stop loss on those psychological zone, or a little bit above the psychological zone, and your brokers know this. I mean, whenever there's a manipulation in the market, they target these places because they know beginners will always put their stop loss on these particular places, probably the psychological zone or a little bit above the psychological zone. So the market goes to that place and clear a lot of people out of the market and gain momentum to move to the right direction. So when this happens, a lot of people are angry, and that's where you see a lot of emotions in the financial market, FOMO, greed, and all that. So guys, just try to use a stop loss at the end of the day. So the bottom line is use a stop loss, because that's the only edge you have over the market. You cannot control how much you lose if you're not using a stop loss. If you have a mentor that is not using stop loss at the moment, be careful, be careful, be careful of those mentors. The next point here is always treat your demo account as a live account. Once you create a demo account, you see traders opening a demo account, $10,000, $100,000 demo account. And you know, personally, you know, you don't have that kind of money in your bank account. That's when you're crediting your live account, you don't have such money to trade. So why trade such accounts? So I would recommend you look for a broker that can give you demo accounts with smaller, capital, right? I think either Infinix or Xness has this, okay? Either Infinix or Xness. I've forgotten the particular broker, but I will just leave a link to them in the description of this video. So just try and open a demo account with those brokers. I will suggest, if you don't have more than $100 to start your trading, pick $100. Just try and reduce the account balance, the capital, your demo capital. Try and reduce it to $100 or reduce it to $1,000. Or if you can afford $10,000, you put it on $10,000 and you manage your trade. And another thing on this point is, guys, when you're trading a demo account, you see traders actually, you place a trade and you're more monitoring the trade. You use big lot size, you can use one standard lot size. And you know, typically when you're trading live, you can't use that because your account balance is just too small and you end up blowing your account. So stop deceiving yourself. Treat your demo account like a live account. So once you go to the live account, at least the emotion, now you just try to fight the emotion and you're not fighting the technical aspects in the market anymore. Okay, so that is that about that particular point. I hope you're following. So if you're enjoying this video, make sure you hit that like button, hit the like button, hit it right now, hit it right now. Yeah, sure. Have you done that? So the next thing we're going to talk about here is risk to reward. Oh, risk to reward in financial markets. This was something I actually came across when I started trading forex, but I really didn't pay attention to it. I just felt like it's just too complicated. I felt was the need for risk to reward. Once I have a perfect strategy, remember, I'm emphasizing on strategy because what beginners traders always believe is all you need in the financial market is strategy, strategy, strategy. Guys, risk to reward is very important when it comes to the financial market. You see, as a trader, you make losses, you make winning trade. You have your winning trade and you have your losses as well. But what will help you at the long run is the amount of trade you win over time. Now, let me explain this. With your strategy, you might have a win rate of probably 40%. That's you're winning 40 times and you're losing 60 times. Now, what's happening is at the end of the day, you might still end up making money in the financial market, despite the fact that you're winning 40% of the time and you're losing 60% of the time. You might still end up with profit at the end of the day. What happens is you are using a proper risk to reward. Probably you're trading an account and you're risking 1% of your account to make 3% of your account. So just do the math. Whenever you risk, or you risk 2% of your account to make 6% of your account, risking one thing and you're making 3 times of what you're risking. That's everything you need to understand about risk to reward. It's just the act of risking little to make more. Just think of it. If you risk $200 and you made $600 40 times, now you risk the same $200 and you lost it 60% of the time. You see, at the end of the day, if you minus the two from each other, you still end up with profit. So guys, treat risk to reward as something important in forex trading. Your strategy might be working at the moment, but because you're not using proper risk to reward, you still find yourself losing to the financial market. So the next thing on our point is you need to become the trader. Guys, this sounds like, what is it, what am I even talking about? Guys, you need to become the trader when it comes to financial market. The difference between a losing trader and a winning trader is someone that has mastered the art of trading. Guys, there is a lot going on behind every successful trader you see out there. There's a lot going on. Probably you see traders meditating in the morning, working out, they have a particular time they sleep, particular time you wake up. So you see, all these things you do background is what affects your trading performance. Okay, if you sleep late, you might not function very well during the day. So overall, you just need to maintain discipline. Forget about all those trading on beach, all those things you see traders promoting online. Forget about it. Don't think about that, guys. Just focus on your own personal journey. See, when it comes to this industry, there's a lot of lies out there, too many lies. So As a trader, you need proper discipline in order to make money from the financial markets. So the next thing we were talking about is risk management. Yes, this is a huge one, guys. Risk management. I remember when I started Forex, I avoided risk management for I think about a year plus when I started Forex. You see, the number one rule of investment is never lose your capital. You need to treat your Forex trading as a business, guys. Try not to lose your capital. You opened a trade without stop loss, but there is a take profit on this trade. Why would you do that to yourself? Now this market goes up. I'm talking about beginners traders on your demo account. Most beginner traders used to do this kind of things. These are things I did when I started, and it's normal. See, everything you're going through in trading at the moment, every successful trader has gone through that. So if you're going through this thing, just know there's light at the end of the tunnel. It's normal thing to make mistake. You see, when you go to school, they flog you because you made a mistake, and in real life those mistakes are what shapes us to become whatever we become in life. So before I digress, when it comes to risk management, you see traders placing a trade. You click the sell button, you're bearish on the market, right? You click the sell button without stop loss, but you have a take profit. Now this market goes for days against you, and at the end of the day this market reversed and came back and hit your take profit. Now you're setting little take profit without stop loss. The amount of pips this market has already moved against you is even more than your take profit. So that's where risk management come into place. The next point is, guys, always risk what you can afford to lose. I remember when I started Forex, I had started making money from the financial market at this point, but I was just confident, like I needed money. Yeah, I needed money. So I used my school fees. I just thought I can just deposit my school fees, quickly trade the financial market and make profit out of it. And then I withdraw my school fees. You understand? It's normal thing. That's how we all think. Yes, that's how we think. You see, that's a big mistake a lot of traders make. Don't do that. Whatever you can't afford to lose. Because what happens is once you put this kind of money you can't afford to lose, you are more emotionally attached to trading at that moment. You tend to break most of your rule. You might start using tight stop loss and the market stops you out before going in your direction. So risk management is key. Make sure you manage your risk. And you might be tempted to place a big lot size because now you need money. Probably you've not eaten or something is going on in your life and you need money. Forex doesn't owe you anything. Yes, forex market is not owned by your family member. It doesn't owe you anything. So don't come to the forex market with the hope that you can just click a big lot size and you make money out of it. Once you start doing that, it's great. It's great, guys. It's great. Because I battled with greed in Forex when I started. I battled with a lot of greed. Alright, guys, if you feel like hanging around for more time, I recommend you check out this playlist where I shared little tips about foreign exchange. Or probably you check this playlist. It's an ongoing Forex course at the moment. I promise to take you from the basic of Forex trading to the brilliance of Forex trading. So if you found this video helpful, make sure you hit the like button. And until next time, happy trading, guys. Cheers.